All right. What is up, traders? What's up, tycoons? Super excited for today's video. We got to talk about natural gas. As always, the content provided on the channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. We're going to see, is it over for Boyle, right? Is Boyle, breaking a key level, and is it starting to break down, or is it pulling back and following the analysis that we're expecting? We're going to break all of that down in today's video. As always, you can email me to zachleytrades@gmail.com if you're ever interested in booking a personal coaching session. So we're going to break it all down in today's video. Be sure to smash that like button, subscribe to the channel if you guys are new. And we're going to start off here with the spot price. Okay. We're going to take a look at the spot price chart. And the reason being is I really just want to kind of explain a simple strategy that I like to use. And it's known as divergence trading. Okay. So what we're going to do is we're actually going to take a look at our RSI here. This is the relative strength index. And then we're also going to take a look at our MACD. This is your moving average convergence divergence. Now, the RSI is what's known as a leading indicator, and the MACD is what's known as a lagging indicator. So, for instance, in this spot here, we see that we have a high on the price action and a higher high. So we're making higher highs, right? Price is going up, but your RSI, your leading indicator, is showing you a bearish divergence with a high here and a lower high here. So being that it's a leading indicator, it's going to tell you what could potentially be happening in the future, right? And we see that we have a bearish divergence forming here, all right, while we're creating these higher highs. And what do we see on our lagging indicator? The MACD is going to tell you what's happened after it's already happened, okay? And we see that we get the red line crossed below this white line here. That's going to be known as a MACD sell signal or an exit signal, right? If we draw this up a little bit bigger so you can see it's more clear, we have the bearish divergence first at this point, and then shortly afterwards, we get the MACD crossover to the downside, and you see that the price action is met with, bearish price action, and we see a move to the downside. Now, does this work the opposite way? Yes, it does, right? So in this case, we're making lower lows here on the price. We're making a low, lower low, but on our RSI, we're seeing we're making a low and a higher low. So our leading indicator is telling us that we're building strength, building a bullish divergence here. And then we see here on our MACD, we get the crossover above the white line right here. And sure enough, we're met with bullish price action afterwards. So with that being said, if we were to apply some of this to our current chart setup, we can see we've been making these lower lows here for a very long time and continuing to create these higher lows on the RSI, on the relative strength index on our spot price chart here. And we even have a bullish divergence forming here on the MACD where we're creating these higher lows as well. But we really haven't seen any follow through, right? We haven't seen a huge push up in the price of natural gas, especially around the spot price. We've really just been consolidating here. Now, the MACD, whenever it ranges like this, and you see how, over here we get these big swings to the up and to the down, whenever it tightens and it ranges, price action tends to follow the direction that it was previously in, right? So you can see here where the MACD is pretty tight, and in this point, price action is in a downtrend, so it's continuing that trend here. All right. So what's interesting here is that we've really just gone sideways for this whole moment, and we've seen the MACD really just range and not really have any big swings to the up or to the downside. So, it's just favoring basically this choppiness right now. So we really need to see a big spike up or a big spike down in this to really get some clear direction on where the next overall larger move, not so much of the smaller day-to-day moves, are going to be. Now, I do like that we have the bullish divergence forming here, but we need to pay attention on a smaller scale to really see where price action is going. Now, 279 has been the big resistance level here for the spot price. Okay, we haven't really been able to get back above there. We've been flipping 243 back from resistance to support again. You can see we bounced there again. So we are getting some nice follow through, and really just trading in this range from 243 up to about 279. Now, if you want to be trading things like Boyle, KOLD, UNG, you need to be paying attention to the futures, okay? Because that's where their price action is going to move from. All right. And if we take a look and we go over here to our natural gas futures chart, we'll start off on a bigger picture time frame. So we're going to go over here to the monthly chart. All right. And we can see our, macro supply and demand zones. Okay. Demand zones are simply an area where there's an imbalance of buy orders that ends up pushing price higher, and supply zones are an imbalance of sell orders that push price lower. Okay, meaning that there's an overwhelming amount of either sell side pressure or buy side pressure. Right. And this demand zone has been very strong. When we zoom back down into the 4 hour here in a second, you can see that each time we've tested this demand zone, we've seen a strong demand and strong reaction from the buyers, but we've really been struggling to get past the supply zone up here. You can see we just completely fell through it. And these are just 2 horrible months of, price action in the natural gas, being that this is a monthly candlestick chart. And we're starting to see this consolidation. Now, there are basically 3 stages to a reversal, right? You have your, initial downtrend, right? And then you get this period of consolidation, absorbing that move, and then you get the move to the upside. So, not we can potentially head lower, right, and break through this demand zone, but it's a very strong demand zone. And to me, we're in that downtrend and we're in this consolidation period now. All right. And day to day, we're seeing swings up and higher, higher and lower. But from a bigger perspective, we are setting up potentially to absorb that recent, big move down to potentially recover and retest, our overhead supply zone up here, which is going to be basically about 360, okay, down to about 310, let's just call it 315. Those are some of the areas that I'm looking at. Now, when we zoom down to the 4 hour, okay, and go over, a much more kind of day-to-day basis and short-term basis, and we take a look, there have been some chart patterns that we've been seeing here that we've been able to use to our advantage. And when you combine them with the supply and demand zones, it really helps out a lot. Okay, so over here we got this rising wedge on our 4 hour chart. We got a very textbook breakdown and retest, right? Breakdown, retest the trend line. And then what do? We come back down, and we know that this red box is an overhead supply zone, an area where there's an abundance of sell orders that keep pushing price lower. So, we know to be very cautious when we have a rising wedge combined with the supply zone and we get a textbook breakdown, retest, and push lower. Now, these blue boxes are known as gaps, all right? And these tend to fill about 90% of the time historically. And you can see that all of the gaps have been filling here on basically on the futures chart. Now, here's that initial strong demand that I'm telling you guys and was speaking of. You see, as soon as we come down into this demand zone, we immediately get a reversal candlestick followed by an engulfing. Over here, we come down into it and we immediately start pushing up higher again. And we haven't retested this demand zone really since early April. Is the last time that we tested that demand zone there. All right, in between there, we did get some head and shoulders, right? We had a head and shoulders right here, okay? And then we actually ended up forming an inverse head and shoulders right after that. Okay, we're right here, left shoulder, head, right shoulder. We broke through our neckline. If you guys are staying up to date on the channel, you know that we're charting these patterns as they're developing. We're saying, hey, if we get a breakout here, we could see a strong push up. We did get a nice push up. All right, and again, here we started to see a rising wedge form in that supply zone. So we were cautious, but we did not see the rising wedge play out, right? We didn't get that textbook breakdown, retest, push lower. What we actually got was some very controlled selling here, right? We have controlled selling, and this is not aggressive selling and aggressive dumping. This is a little bit of profit taking, looking potentially to make the next move higher, right? When you can spot these structures and spot this controlled selling, that's really going to give you an advantage. Now, we did not get any follow through on the breakout, right? We needed to get a breakout, retest, push up higher. And you can see that we're actually trading a little bit back within that range, okay? Really just consolidating right around this trend line. Now, there are some key areas of support and resistance that we have, 213.8. All right, this right here has been a strong support level. And really, this level up here, 228.1, we've tested this level so many times, guys. If you take a look here, right, the more times you test the level, the weaker it gets. 1, 2, 3, 4, 5, 6, 7 right here, 8, 9, 10, 11, 12, 13, all right, 14, 15, 16. 16 times we've tested that specific level here of 228.1. So if we can get a strong rally up and basically retest that zone again, I think that there's a strong chance that we could see a higher push up, towards the top of the supply zone here, which would, take us around, about 265. on the MCX futures. Now, realistically, we're most likely going to retest this level here about 246 to 247. If we are able to break through that 228 level, that's going to be a target area right here, in an area where we could tag and then get some pullback there. So, we may not go all the way up to the supply zone. We may just come here, okay, to that 246, 247 level. It just depends on what price action is going to do. Now, we could say at the moment that we have a little bit of an inverse head and shoulders forming, but I don't think it's the best looking one. But essentially here we would have our left shoulder, here's our head, here's our right shoulder. And the neckline is just kind of sloppy on this. I mean, you could call this the neckline, or let me get a better drawing tool. So you could try to call this the neckline, something like this. Or if you wanted to, you could try to say something like this. It's not the cleanest. So we'll just have to see how that develops. If that ends up developing and turning into an inverse head and shoulders, that'll be something to definitely pay attention to. At the moment, we would look to see if we can continue to hold this trend line here, right? And we want to be cautious if we start trading too aggressively to the upside and holding this trend line right here. This specific pattern is known as a bump and run, where you have a prevailing uptrend and then you get a bump up in the price. And if you break this trend line, all right, this trend line right here, then you would see a breakthrough, eventually both trend lines, and that would put the natural gas futures here on the MCX right around 204. So lots of things to pay attention to. All right, this is the futures. We went over the spot chart. Now let's actually break down BOIL and KOLD and UNG. So we'll start off here with BOIL. We'll go to our daily time frame real quick, and this is the analysis we were looking at. And we're looking for a larger retracement of this huge move down, right? I mean, we zoom out and we take a look at the chart. It's just been brutal, guys, and we haven't really had any big retracements to the upside ever since this bounce here, where we went from 89, 85 all the way up to about 160. So since that moment, we haven't had a strong retracement. And so that's what I'm looking for here. This is going to be my swing high to swing low. And we'd be looking for a retracement up here to about $89, potentially all the way up to 116. If we get above 116, there's a good chance that we could fill this gap up here on BOIL, which is going to put us right around 138. So, lots of work to be done until then. But when we dive closer into the analysis, again, we're looking for a correction off of that larger move down, and you typically get those in an A, B, C, right? An ABC correction. And so your A wave would be a 5-wave impulsive move, and then your B wave down would be a ABC correction, and then your next move up, your C right here, would be another 1, 2, 3, 4, 5. And that's what we've been looking at and tracking here for, the past little while that I've been trading BOIL and going over these BOIL videos. And you can see it played out very well, okay, so far, right? We got the 1, 2, 3, 4, 5 up, then we got an ABC down. And you can see we pulled up, we made a wave 1, and we're pulling back now at a wave 2, and we're holding this support here of $60.94. Basically $61. If we get above 64, 65, we need to come in here, take out some of our previous highs, and that would give us our wave 3 target up here, which is going to be right around above $80, right around $80 to $83. 80 to 84 is going to be our range. And then once we get there, potentially we would be looking for another pullback to launch us up higher to around that $89, maybe 102, all right, or even 116. It just depends on how large this wave 3 is going to be. Wave 3 is typically your largest wave and your strongest wave. So at that point, we'd look to see, does this wave 3 extend all the way up to 89, 102, something like that. For right now, I'm just seeing it potentially going to around the $80 to $83 area. So that's what I'm tracking out on BOIL. If we break below 60.94, 57.23 is going to be that last line in the sand. And if we flip that area to resistance from support, then most likely we're getting a reversal back to our previous lows. All right, so that's what I'm looking at on BOIL. When we take a look at KOLD, all right, which is going to be basically the inverse of BOIL. All right, we're still trading below $60.36. So here also, we had a very large move, right? If we take a look, we had a 5-wave impulsive move to the upside, right? 1, 2, 3, 4, 5. And remember, those wave 3s are the really, really strong ones here. And then we started to form some bearish divergence, right? We talked about this divergence trading in the beginning of the video, and now we're kind of heading back to it. So, you see we're creating these higher highs on the price action, creating these lower highs on the RSI, right? We came up, just short of our 93.79 target here. And then now it appears we finished our wave 5 up, and we'd be looking for an ABC correction to the downside. Now, this also correlates with the bear flag that we had forming here on the chart. You can see we had the strong move down, then we formed a pennant right here. All right, so bear pennant, bear flag, whatever you want to call it. And we had a look above and fail right here, which is pretty significant, right? The reason those are so significant is because at this specific point right here, this is where buyers are supposed to step in and show that they have control, right? This is the buyer's full opportunity on the break of that trend line to really show that they're in control of the price action and push things higher. And if they fail and get a failed breakout, a look above and fail, it's a bearish signal because it shows you that when given the opportunity, bulls did not step in, and it shows you that bears are actually in control of the price action. And that's when we saw the actual breakdown. Now, we did have a push up here in KOLD recently, but I think that was largely due to fill the gap, right? So we have this gap here. You can see that that gap is filled now. And really, if we stay below $60.36, I think that, KOLD has the potential to go lower, right? Now, above there, that's when things are going to start to look a little bit different. And maybe this ABC down, has technically already played out, right? If you wanted to, you could say that this is a 1, 2, 3 down right here. And that's something that we need to be cautious of, right? It would be that scenario, right? Where we have, here's our wave 1 right here. Okay, and then wave 2 up here, and then wave 3. If this is our ABC correction, then we need to be cautious, and we could be starting another move up in KOLD. So definitely pay attention to that. $60.36 again is that key level that I'm really looking at. Above there, we do have some resistance at 66.48. Let's go ahead and take a look at UNG now and go into the natural gas fund. All right, here on UNG, all right, we're not getting much follow through, right? We had a 1, 2, 3 up, right? This wave 4 down right here looked like a basically an ABCDE, all right? ABCDE, all right? Also very controlled selling here, being able to spot these structures. We're breaking out. Looks like we're trying to retest this trend line here and get the push up, but we still haven't seen that follow through. $7.15 is that key level we went over in the last video. You can see it was strong support here. Now it's strong resistance, and we're really just trying to decide, buyers and sellers are trying to decide who wants to take control right now around this $7.15 price level. Once we get some clear direction, we should hit the next move up, which should put us at 821, or the next moves down, where support is going to be at 667, 642, and 606. If we were to look at our RSI here and just extend this over a little bit, let's go ahead and hit the extend to the right. Okay, you can see we're very close to that initial bullish divergence trend line. Again, these bullish divergences have provided really good opportunities for, trades, all right, in short-term trades. Now you take a look here, we have the low, we have the lower low, we have a low, we have a higher low, and then that led to a 40% move. And then what do? We come down and create another lower low, but here we're creating higher lows again. That led to a 16.89% rally. Over here, again, making lower lows, making higher lows, 26.8% rally up here. All right, 33.5% rally, and still creating these lower lows while also creating the higher lows. So that's basically my breakdown and my view of everything when it comes to natural gas. We did a lot in today's video. We covered a lot. And if you appreciate that info, smash that like button, subscribe to the channel. Feel free to share it with someone who you think may be interested. And remember, you can always hit me up at zackleytrades@gmail.com. If you're ever interested for a one-on-one personal coaching session, I'd be happy to schedule a time with you. I'm doing those every single week.